Welcome to my trading room, and I'll be taking you on a full trading course. And right now, we're going to be going to model 5. Don't forget to like, share, and comment on my video. Whatever questions you have and things you need clarity on, my email is always open for questions, and that is going to be mostly for the premium subscribers. I think I need to make that exclusively for them. Moving on, my private mentorship class is open for those that are interested in private mentorship. So you check the link on the description and you can get started. So in the module 4, we'll be talking about analysis, fundamental and technical. So fundamental analysis is mostly that has to do with economic data and the rest of that. Like we have here economic data, political and geopolitical events, we have central bank policies, we have trade and capital flow. So under economic data we have things like non-farm payroll, NFP. NFPs are monthly data that are released by US, United States, showcasing the number of unemployed and employed people. Now, if the number of unemployed persons is high in comparison to the previous data, it showcase a weak dollar. But if the price of dollar, or if the number of unemployed person is low compared to the previous forecast, it signifies a stronger dollar. That's what you should take note of. Then we have consumer price index and we have product price index. Those are economic those are important economic calendars that move the market a lot. Whenever such information is released, the prices of currencies change drastically with a very, very high speed. So it's always important that during these times you pay attention to what you're doing. And as the case may be, I do see that news trading is gambling. The reason is because it doesn't respect your analysis. Like, no matter what you're doing, it doesn't respect your analysis. I'm not a news trader. I don't fancy news trading because I know what I'm doing with my price actions and the rest of others. So if you're trading the news, it definitely means you're gambling. And if you have to gamble, make sure that your risk management is in place so you don't get hit out. Your stop loss is very important, because one thing about news trading is that it might hit your stop loss at any time and still go back to your direction. Okay, that's how it is. That's news trading for you because of the volatility at that particular time. Then we have things like political and geopolitical events, like elections of a particular country. If you really notice, anytime, if you really want to check, each time there is a change of government, in a country, the price of their currency goes higher. Like in Nigeria as we are now, if you want to check from Yaradua administration down to the current administration, you will notice a significant change of currency prices once a new government is being established. During Yaradua administration, the dollar was at 16 naira, 70, 80, 90. That was the range. During Jonathan administration, it moved to 130, 120 and thereabout. during Buhari administration, it moved so fast to 300, 400. Now, what's really affected the market at that particular moment is one, the change of power, which I can classify like elections. Those are the first thing that affects the currency prices. Now, the second thing that affects the currency market was that the balance of trade, there was no trade balance, which we can see here. Trade balance, I'll talk about that. There was no trade balance in Nigerian's economy, so the currency had depreciated very fast. You understand? The elections affected it, trade balance, and we also had political tensions, which was Boko Haram issues. So that is how fundamental analysis affects current price. Now, if you also want to check, one of the examples I've mentioned is that of Ukraine and Russia. If you notice that when the news was announced, there was a very, very swift movement of price against United States dollar. That is a foreign reserve currency, don't forget. So gold sold more against dollars, gold, because of, based on the political tension at that moment. Gold was defying all analysis, all everything, like no analysis was correct, and it hit its highest high of ever. Gold hit its highest high. It is not a normal thing, it is caused by political tension, and that is how far fundamental analysis can go. So if you're trading using fundamental analysis, one thing you should have in mind is that you got to gamble. It is not, you have to gamble because it defies technical analysis. It defies technical analysis. It doesn't respect the support, it doesn't respect this resistance, it doesn't respect any parameters you think you can use. That's one thing about fundamental analysis. So if you are a forex trader and you mainly trade the news, please, you're a gambler and you're not trading. If you want to trade, you have to filter the news from your trades and trade perfectly well. That is when you can that's when you can understand what you're really doing. So in the political and geopolitical event, I've talked about elections. Then geopolitical tensions are things like war, civil wars, you understand. Probably crises are happening. Maybe there's a riot going on, or there's a protest that is taking longer than usual. Understand? Things like that affects the country's currency. I mentioned some cases, like in the case of Nigeria and Boko Haram, and you know that once things like that happen, foreign direct investment becomes difficult. Understand? Because people are always looking for security. When you talk about investment, the first thing you have to put in place is security. Is your funds secured? So you don't expect foreign nationals to invest in a country that is turned into a war-torn area. So it really affects the country like that. Then if we move further, we have government policies. Now the policies governments make will actually affects currency more. Understand? Affect the currency more. Like in the case of Nigeria now, you can check out that the CBN are always coming up with policies every now and then. These policies are always making the naira fluctuate. There is no stability in their policies. Today they might come out with a new interest rate, tomorrow another interest rate, before you know they will change. Those things are what affects currency prices. Now, if US were to do the exact thing Nigeria just did, changing of interest rates and giving different rules on BDCs and the rest of all that, you're going to notice a very, very volatile movements of USD pairs, either for it or against it. It is caused by the policies set aside by the government that has to do with trade and currency. So any decision that has to do with money, any financial decision that has to do with money when it comes to the government or a nation, it affects the currency prices. Understanding affects the currency. Even a statement made by ordinary statement made by CBN governor can affect the currency prices. Like, okay, very soon I'll be taking you to Forex factory where we are going to view different news, and I'll show you where some CBN governors were making statements. That is CBN governor in US or central bank governor in US. Let me not use CBN because it's not Nigeria. So central bank governor in US was making statements. Anytime they are making statements, key officers in their central banks, Federal Reserve, that's what they call them there. Anytime they are making statements, there is always a very volatile movement of currency pairs. Their speech matters a lot because they are telling you the next move of the country in regarding monetary policies, understand, and the rest of order. So price cannot be the same after any policy regarding finance of a country is being made. Price cannot be the same. There will always be a change. Now we go to central bank policies, which has to do with interest rates. I've talked about this. I've talked about how the government of Nigeria was changing the interest rates on daily basis. I've talked about monetary policies and statements and minutes. That's when CBN hold meeting, or CBN or central bank governors speaks or does things like that. Monetary policies, anything that has to do with trades, balances, and all those. So trade and capital flow. Once they now a country currency will definitely be weak when the import is greater than the exports. That is a very keynote point you need to put in place. Now, the reason why Nigeria will keep suffering currency crisis is because their import has exceeded their exports with a good margin, and one of the best ways to cube these scenarios is to encourage a producing economy. You understand? A producing economy. And from my own view and what I believe and have seen is that government-owned companies don't strive well. They don't do well. So it is better that if the government is going to bring in industries, it's better they go. It's better they have a public-private partnership. Like, they need to partner with the private sectors in order to run those government-owned companies. I think that's the best way to go, because if you really want to check, there are a lot of industry owned by Nigerian governments that's not functional. So to encourage trade balance, we have to pull in enough industries. So once there is a defect in trade balances of a nation, the currency cannot be stable, and a weaker currency is very bad. As a nation, Nigeria is having a weak currency. So maybe trade balances are measured on a monthly basis. So if, assuming in the US economy, assuming that for a particular month the import was greater than the export, we are going to have a weaker US currency, a weaker US dollars. Same thing as foreign direct investments. All these things affect it. Foreign direct investment, people, companies from foreign from foreign nations investing directly in your place. Those are the things. So now that is everything you need to know about fundamental analysis. Fundamental analysis has to do with economic factors, political, central bank politics, and also human factors. Those things affect prices. Trading the news does not mean that you can make profits. You understand? You can definitely make profit, but the truth and what you should understand is that it does not pay attention to, like, it doesn't have a specific analysis. I am analytical model you can use to measure the price movement or to determine the price movement. That is one thing about fundamental analysis. So if you have to trade it, you need to wait for the news release, or you look at the forecast, compare it to the previous, then you can help determine which position you are going to take on. So let me go over to the Forex factory, then I'll be talking about a lot of things that you can also put into consideration. Now this is the Forex portal. Here, this is the navigation button where you can switch to whatever you feel like doing. I can decide to view the news that happened previously, or I can decide to view the news that is going to happen ahead. This is just the button to control your view, what you want to see and what you don't want to see. So for now, I want to look at the NFP that will be happening next month, which is going to be June. So the NFP is going to be on 7th, which is Friday 2004. So that's what I want to be looking at. So today, this day, this week, whatever you want to do, you can decide to do. Now what I'm viewing now is Forex calendar. This is a Forex calendar. We have metals calendar where gold falls in, silver and other metals falling. So this is metal calendar. They have their own news too, and of course people run crypto. If you're trading metals, you work with it. You work with this too. You work with this. So, and also we have crypto calendar. You are trading cryptocurrency, you work with this calendar. So we have calendars for everything. So we have crypto calendar, and we also have energy calendar. Of course I don't do all this, but it's good you know. Knowledge is never wasted. So we are dealing on Forex calendar. That's what Gaspar is specializing on. So now I want you to look at these colors here and understand what it really means. Now you can see this is just impact tab, the impact button on. Now when it is deep red, when it is red, it means the news is a high impact news that causes a great significant change in market. Medium, low, or medium, the impact is not as high as that, but you will notice it. Then low, you might not even, if you're trading and you didn't check, you might not even notice that the news has been released. That's how low it is. Then non-economic, it doesn't even affect price in any way. So related stories, if you want to read the stories behind it or whatever. So when you see the green number after it, means it was better than what was forecasted. Probably we assume that NFP will be 150, and it turned out to be that the NFP was not just 150, it was 120. It means it's better than forecasted. You understand? Forecasted in the sense that the number of unemployed people have reduced drastically, so it means a stronger dollar. Now you have to do it in comparison to the previous forecast. Maybe the previous forecast was like 300k, then the previous NFP was 300k. The forecast is now 200k. Now the actual is now 100k. Okay, the forecast is now 200k. Now the forecast is now 100k, or the actual. It means that, okay, probably I didn't see the actual. Probably I didn't see this actual when it was released. I didn't see the actual. I just saw the forecast that was 200k and the previous was 300k. In that sense, I'll be looking for a stronger dollar. So if I'm looking for a stronger dollar, if I'm trading the news, I'll be looking for only buying opportunities. And if it moves out of that range, I'm not gonna be trading the news for that day. That is how I do it. Understand? And if I'm going to risk, I risk very small to gain very big based on the volatility. Now, so if the forecast was 200 and the previous was 300, then the actual now became 100. It means that it's better than expected. It's going to give you green. It's better than expected. It's far more better than expected. That is how it is. That is how it is. So probably you can relate that to other news release. Can read that to other news release. That's what you should do. Okay, I can see example here. We have existing home sales and the previous was 4.22. Understand? Now the forecast was 4.21. That means we're expecting something at a static point. Nobody was expecting too much from the market, but the actual now fell below our expectation. It gave us red because that was not what we were looking at. Understand? That was not what we were looking at. So it signifies a weak dollar. We're looking at an average dollar. That's why you're seeing 4.20. We're looking at something average, not too much movement. I can see that, not too much movement, but the red signifies a weaker dollar. So that is how you can use currency pairs. A weaker dollar, a stronger dollar. The green is a stronger dollar. That's it. A green stronger dollar, the red a weaker dollar. So that's what it. Now this is a search tab or a filter tab. Now you can filter whatever you want to see and what you don't want to see. Now assuming everything is like this, I want to view news related to US dollar because I want to view news related to only US dollar because I only trade USD pairs. I don't trade anything close. Probably I trade just GBP USD. So I'll be only looking out for news that has to do with GBP USD, and that will be only GBP and USD. Or probably I was trading just JPY, USD JPY. So I'll be looking out for news that has to be USD JPY. So I'll have to. So for now I'm trading just US 30. That's what I do. So I only need the dollar news. I just want to know what is happening in the US because US 30 is just an index. US 30 is an index and it's just based on top 30 companies in US. So everything news in Canada, Japan or whatever country does not affect it except is a political tension that has to do national or nationwide or world in the world. Something like that can affect it. So that's what I want to say. I just want to see USD news. So I don't want to view anything. This doesn't have any impact on my trades. I don't need the low impact, and for some reasons I need this and I need this. So I'll just be using these two. So I'll apply my filter. Now everything that will be showing on my news fields are just gonna be USD news that are high impact and medium impact. That is it. That's it. So you can use here to control your calendar to know what you want. Now there's a popular tab I like using sometimes, but that's not a basis for trades. That's not basis for trades in any way. Most times I do come here to see what other traders worldwide are doing. And if you come here, you discover that for every position you are buying, someone is selling. For every position you're selling, someone is buying. Now in Euro USD we have 127 traders bought, 147 trader sold. Understand? This is it. Now GBBUSD for today was actually selling, but yes, still some traders were buying. I was asking, why are you buying GBBUSD when GBBUSD was actually selling at the time of throughout today? It sold massively. These are things I look at. So that is how things turn out to be. This is just these are not fundamentals. What I'm just did now is not fundamentals. But most times I just come here just to know what other people are doing. For every position you're buying, someone is selling. So if you think you're really bad, check what others are doing. You'll discover that you're not the only one that is failing. Other people are failing. You get? I'm not saying that you shouldn't put no effort to become good, but I'm saying that people have different ways of doing analysis, and the analysis might give them something bad or it might give them something good. But what is important is that make sure that you always adjust your analysis with time. Understand? Always adjust it with time. If it is not giving you the result you need, make sure you adjust it. Always improve on it. Always improve on your analytical model, like your trading strategy, analytical model, whatever kind of model you're using to do your analysis. Always improve on it daily. It's very important, because if you don't, you might discover that you are lacking way behind. So we move to technical analysis. Now in technical analysis is like you are predicting price movement based on previous actions. Understand? You're predicting the next movement of price based on previous market movement. So the basis of technical analysis is price chart first. You need a chart. You get? Is either you use your laptop screen, you can use your phone screen. Some people have the ability of using phone screen. Some people are not good at that. Some people like using larger screen, as big as a flat TV or whatever you want to use. Some people like using a large screen. Some people are okay with their laptop. Some people are okay with their phone. Whatever is okay for you. So far you can view your chart and make your analysis correct. You can always use. There are no rules to that, and screen does not make a perfect trader. Understand? The kind of screen you use does not matter. The question is, do you really know what you want? Do you know it? If you know what you want and what you're looking for in the chart, you're always good to go. Now the next thing is we have line, we have bar. The best kind of chart to use is candlestick, which is something like this. This is a candlestick. So this is what you should always be using at all times. This is a candlestick. We have different types. Like if you're using a trading view app, we have different types these are all chart view. These are those ways to view chart. I'm not interested. Please just make sure you're using candlestick. That's the required. That's the required thing. So moving on. So now the next thing is trend analysis. You have your price chart now. You have opened your charts. You have a broker. You have everything. Now if you don't know how to open a broker, MT5, MT and whatever, make sure you refer back to module 2 so you know what I'm doing here. Now the next thing is trend analysis. You definitely want to know if the market is going to be going up, or is going down, or is going sideways. Like something like this is a sideways movement. Something like this is a sideways movement. Something like this is a sideways movement. Get something like this is a sideways movement. So you want to know if price is going this way, or it's going down this way, or it's going up this way. That's what you want to know first. So that's the first thing. Sideways, you want to know if it's going up, down, or sideways. So the next thing you look at now is the support and the resistance levels. Now, so where is the support? Place like this is the support. Place like this is the support. Place like this support. Now you may be asking, what is support? Those are support. Now where two candles or more meet and reverses at that point, understand, that's a support or that's a resistance. Now support is below, support is below, resistance is upwards. So this is a resistance, this is a resistance, this is a resistance, and this is a resistance. Now these are upwards, they are all resistance. We have so these are all supports. Here is support, here I cannot draw everything here. So those are support levels. Now so now you want to know where the support levels are, you want to know everything. Now if you're making your analysis, you're going to be looking for the most recent support and resistance levels. You're looking for the most recent, you're not looking at the previous ones that have gone far ahead. The only support and resistance model you'll be looking for are key levels. I'm going to come into that so that you understand. Are key levels, that's what you'll be looking at. Are key levels that price have not reached yet. So for now, you're definitely looking at you'll be looking at the most recent support level. Like this is a most recent support level here. So if price get to this point, I'll be looking for trade entries too. This is a resistance zone. This is a key level, this is a resistance zone. So we have something here too. Of course this place played out already. Understand, we have something like that. So this is a support, this is a resistance. Okay, this was a pullback. It can also act as a key level, as a support or resistance level, both. So that's what you understand about support and resistance levels. Now we have indicators and we have indicators and oscillators. We have moving average, convergence, divergence, we have relative strength, we have Bollinger Bands. We have Bollinger Bands. Now, this is where the indicators are indicated. So we have something like RSI. Now, this is what actually RSI is all about. If you come here, you'll see price is at 80 at this line. This is what they call overbought region. This is an overbought region. This region here is an overbought region. Then if you come below here, you see it's below 30, or I can go low as below 30 is the standard. So this is the oversold region. Now, when the RSI gets to 80 above, we are looking for a sell signal to go down, to sell. We are looking for a sell signal to go down. When it reaches and passes below 30, we are looking for a buy signal to go up. Now, the disadvantage of using RSI is that most times it doesn't tell you what is going to happen, or it is going to just tell you what has already happened. Understand? So if you don't know how to read chart, it might have passed you by before you discover. Imagine, you don't need such scenarios where you're meeting a signal when it has already happened. Really? You don't need it. You don't need it at all. Okay, assuming we are in this point now, this is what you see, and we are using the 1 hour time frame. So it has been buying. So this was an opportunity here. We all saw it. We all saw the opportunity. But it's very deceptive, because if in a normal view we'll be waiting for price to reach here before we sell, and it never happened. So those are the lapses of RSI. So now if you're saying you should sell from here, imagine the market has been ranging throughout, and who knows, it would have hit your stop loss by now if you didn't keep a wide, if your stop loss wasn't wide, or probably you bought from, or you sold from here. See what would have happened to you. So those are the lapses of RSI. That's why you don't use it. You don't use it, but you should know about it, but you shouldn't use it. Now we have RSI, we have Bollinger Bands. Now mostly Bollinger Bands are used for if there is a consolidation, like I was saying before, if there is a sideways movement of price, you can use Bollinger Bands to know when it will break out. So Bollinger Band now Bollinger Bands will help you identify where price is breaking out to, but it's also very, very, very deceptive, because you can lose, you can miss it. I'm trying to see how I can. So assuming price was consolidating here, as we can see, and there was a breakout straight to the upside, so that is where we are not going to be trading on. So it means we will now be trading the upside. But there is also a defect here. Remember, it first broke out to the downside, reached the head of the line, it never broke out, and it did the same thing here. It consolidated again and went up. That's why I don't really encourage I don't really encourage indicators because it has a lot of whole lapses, and you're not someone that knows how to trade already to understand false movements, manipulations. You may really get it wrong. Understand? You may really get it wrong because Bollinger Bands can make you think that price trends will last when actually it won't. And most of these indicators and oscillators one thing indicators does is that it tells you when price has already moved. Probably it has already started the bullish movement ever since. Then we'll be telling you 2 hours later. Oscillators will be telling you the next movement. It will tell you the next movement 1 hour before it happens. So that is how it happens. That's why I don't encourage price. I don't encourage indicators trading. That's why I don't encourage indicators trading. So chart patterns are the main thing. Yeah. Chart patterns. Chart patterns are the main thing. We have things like head and shoulders pattern. We have double top and bottom. We have wedging patterns, rectangular patterns, or pennant pattern. In the course of this course, I'll be talking on them, and I'll be talking widely on these things. But this is just an introduction into technical analysis. We are gonna go deep. I'm gonna go deep into it. We're gonna go into deep. You understand how this work. Understand how this work. And one thing you should know about chart patterns is it can be the way it looks on book is not the way it appears on chart. The way it looks on book is not the way it appears on chart. That's why in the course of this course there are necessary things you need to always look out for when you first look out for when you first open your chart. First thing, look at the support resistance levels, draw the key levels. We are going to talk on that widely. So after